Hey guys, it's Dee Allen with the Allen Turner Home Team, and I want to take a few minutes today and talk about all the excitement, let's say, in the stock market as a reaction to the international situation with the coronavirus and the economy and all that good stuff, and how it might affect us in the real estate business. I think it's going to provide some opportunities. Certainly not good news overall for the economy, but it is a fact, and it's going to be a volatile time here for a little bit. But there are still we have seen many buyers out there who are ready to buy. Mortgage rates are unbelievable, and I think overall the opportunity is still there to sell your home at a great price and to buy your next home also at a great price. And the affordability has only been enhanced by the low mortgage rates. And we're going to look at some of the numbers on that kind of stuff. But so I think we need to move forward and continue to look at real estate as the steady and safe investment that it is. It should continue forward to grow the values typically 3 to 5% as they do year in and year out. And I'm going to tell you why here in just a second. So let's take a quick look. I'm going to get myself out of the way. And the market fell off the table this morning, right off the bat. As you can see right here, kind of interesting numbers. But it's come back up, gone back down. So it's kind of bouncing around. Pretty typical day these last couple of weeks with the stock market, up and down, up 4% one day, down 3% the next, so on and so forth. But that's what's caused people to flee the market to the bond market, which has positively affected the mortgage interest rates. So that's actually pretty good news if you are in the housing market, whether you're getting in or getting out or buying a house or selling a house. That's only really good news for you. So let's look at mortgage rates today. What people do, what investors do, if the stock market is crazy like it is, they tend to go to safer investments or more certain investments that they know what their return's going to be. And they go to bonds and they go to real estate. So, maybe you should follow their lead. Look at this 30-year rate right here, 3.375. Now, this is just kind of a generic national publication here, the mortgage reports. I guess that says it all. But I was talking to one of my guys, Jeff Zuloff, with Loan Depot today, and he's at 3.29. And the FHA and VA loans are well into the twos. So mortgage rates are fantastic. So affordability is fantastic for homes, certainly in the Atlanta area. So let's look at those numbers. Actually, this is the month supply of homes. We've been talking about it for a while. I'm going to put my listing cap on now. We've been talking about it for a while, Nick and I, about the lack of inventory, and this just proves it out right here. Based on the rate of sale, this is the month supply of inventory, which is a great measure to actually see without having to look at the number of sales versus the number of listings and so on and so forth. We've done the equation for you right here. And typical balanced market in real estate is a 6-month supply. That's what we consider a balanced market between buyers and sellers. So less than that, less than a 6-month supply is moving towards a seller's market because it's very competitive, and more than a 6-month supply moves to a buyer's market because there's too many homes on the market. Well, you can see, I believe, that at the big price point in our market is this 300,000 to 500,000 price point up here, right here, as you can see. And that makes up about 60% of the sales in Metro Atlanta are in that price range. And that price range dominates the market. That's obviously more than all the other price points combined. So that's a big chunk of the market. If you look at the year-over-year difference, it was a 2.9 month supply February this year. If you go back to February last year, it's 3.4, so that's a half a point down. Doesn't sound like much, but that's 14%. Inventory down 14%. You go to the next price point, and we have these numbers right here for you. If you go to the next price point, is that 500 to 700, and it's down almost 11%. Go up even higher, it's down 13%. I mean, inventory is down relative to last year. I mean, it's always lower this time of year than it is in the peak May, June, July, August selling time. But year over year, we are really struggling to get homes on the market, and there are buyers out there. So if you're thinking of selling, this is the time to do it. That's why we're trying to make America listed again. But we've been having fun with that. But but with this activity in the lower interest rates, and even more people are going to enter the market looking for that safer investment in real estate, whether they're investors, they're iBuyers, whatever. There's a lot more ways a lot more folks to sell your home to now too than there used to be, rather than just a human being trying to buy a home for themselves. So there is going to be some serious action here for the next several months. So it's a great time to sell, and I think with the rates like they are, it's a great time to buy that next house too. So give us a call. Nick and I are here to help you. We'd be happy to walk you through these numbers, these facts and figures. And real estate is going to continue to increase in value for the next several years. That's been the anticipation. Coronavirus be damned. I think it's going to happen. And I think the experts will back me up on that. So call us today, D. Allen, 678-206-6041, and Nick Turner, 770-490-1427. We are here to help.